I've seen the sentiment shift in Bitcoin, and I was waiting for this shift. I knew it was coming, and now I feel like it's here where, I don't want to call it retail euphoria, but we're getting close. I mean, people like Lindsay Lohan, for example, are calling out now saying, if you don't own Bitcoin, you're an idiot. And those are the flags that you got to look for, right? So are you seeing those flags? Are you concerned that we're sort of reaching a frothy top or not? Does it not bother you?
So I think we're firmly bull market. I mean, it's certainly a popular trade at this point. My base case is that trade's not over yet. That Bitcoin probably still has more to go in this cycle. Potentially, for example, when we see some of those 3% CPI prints, like I mentioned, in quarter two, I still think there are a variety of kind of catalysts ahead. That the TGA drawdown, the stimulus checks going out, the potential for 3% CPI prints, and so and looking at just a variety of on-chain indicators. Basically looking at what long-term holders are doing, you can generally see these patterns play out with Bitcoin. And so far, the underlying fundamentals still look strong. And as another example, Bitcoins are still leaving exchanges, meaning that there's still kind of a net outflow where people are buying Bitcoins, putting them in cold storage. And so overall, this huge price increase hasn't yet been enough to get long-term holders to basically dig their coins out of cold storage and sell. But it started to happen to some extent. We saw some profit taking in a little bit in recent months, but nothing that yet would suggest a major top's in place. But of course, it always remains to be a possibility. We can't purely go on what fundamentals are doing, what past performance, because ultimately sentiment can dictate a lot. Another thing I point out is that a lot of the kind of the altcoin space has taken some of the really kind of frothy elements. And so, for example, we've seen intense euphoria around NFTs, and some of these kind of utility protocols. You could say like some of the Ethereum competitors, and DeFi was big for the past couple of months. Now it's kind of been replaced by NFTs in sort of the narrative. But overall, I think that's where a ton of the really retail speculation is. Whereas Bitcoin, ironically, a lot of the retail people are saying that Bitcoin is not fast enough for them, that they want to go into that kind of wild west of the different types of tokens. Whereas institutions are the ones that are still loading up on Bitcoin, as well as some of the more kind of dedicated Bitcoin investors.
Purely from a speculation standpoint, 2021, are you choosing Bitcoin or Ethereum?
So that's tricky because during a Bitcoin bull run, a lot of times those other protocols actually outperform on a percentage basis during the bull market. So I don't really have a high conviction between the two during 2021. I would lean towards Bitcoin if you talk about multiple years to include, say, the bullish run and then whatever pullback we're going to get.
Right.
So that's my preference as a protocol. But during that up phase, who knows?
And I guess that answers my second question. I was wondering about time horizon. If you're looking for an exit point this year or in the next sort of 12, 18 months in regards to your Bitcoin position, but it sounds like not, right? You're holding for the long term.
Well, so I think, there's basically a difference between a strategic holding and a tactical holding. And the same thing's true for gold. So, for example, someone might have physical gold as a strategic holding that they don't really plan to sell for the foreseeable future. And then they might have gold miners or gold ETFs that they're using as a tactical play because they're bullish on a certain time period. And so I'm viewing Bitcoin similarly, where I think probably later this year is a good exit point from a tactical standpoint, or at least to basically rebalance the position and not become super overweight that position. Right. And I treat different types of Bitcoin holding differently. And so, for example, in one of my model portfolios, I already sold a small tranche of the GBTC that I hold in that portfolio just to stop that from becoming such a big chunk of the portfolio. And so we've already actually, taken more profits than we put in. So the whole rest of the position is just a free riding position. And it's still a pretty big chunk of that portfolio, but it's not, I'm not letting it get too big of a percentage because a lot of people kind of follow that portfolio. For some of my other holdings, like my cold storage holdings, I don't plan to sell those, just yet. And so I kind of separate that strategic holding from kind of another portion that I'm willing to rebalance or kind of trim in certain tranches to not be overweight.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
Specifically from gold bugs more so that Bitcoin is eating gold's lunch right now as the asset, the role that gold used to play. A lot of that dough is now moving towards Bitcoin. What do you have any thoughts on that, Lyn? Does that resonate with you, or do you think that's missing the point?
I think around the margins, it stole a little bit of the narrative. But if you look at, if I just looked at what gold, if Bitcoin didn't exist, and I'm just looking at what gold is doing compared to 10-year yields, nothing stands out as unusual. Now, it might be on the weaker side slightly of what I'd expect. Maybe it's $100 lower than I think it should be. But overall, it's roughly following what I would expect from money supply growth and from those 10-year real yields. And so, it's possible that Bitcoin is responsible for the fact that it's on the weaker side of what I'd expect rather than, say on the stronger side or kind of average. But overall, it's not really doing anything enough that I would call it deviant from how I'd expect gold to be behaving in this 10-year environment. Now, overall, real yields rose a little bit quicker than I would have guessed, say 6 months ago. And so gold's been slightly weaker than I would have guessed 6 months ago. But comparing those two measures together, it's making sense as gold relative to real yields. But because we're getting such strong action in Bitcoin, and because younger investors are generally using, Bitcoin more like that gold proxy, we are probably getting some money flows that would have otherwise gone into gold and silver instead directed towards Bitcoin. But I view it as a big mix. And so some people are only one camp, only the other camp, whereas I like Bitcoin, I like gold, I like silver, I like copper, I like uranium. And I kind of just tilt them based on, what's getting out of hand. And so, for example, last summer, I was still bullish on gold, but I started rotating more and more into, some copper, some Bitcoin, things like that are a little bit more of that kind of inflationary bent to them. And those have done well. But for example, copper, I think is, it's gone up pretty far, pretty fast.
Mm-hmm.
And so it's starting to look a little bit more interesting towards gold again.
Just to touch on that. So, we're expecting inflation to run hot. We're expecting the Fed to continue to suppress rates, creating this, negative real rate scenario, which is typically a great setup for gold. If that's the consensus, are you surprised that gold hasn't performed better since August? It's been a very soft market.
Not really. It's been, I guess, slightly weaker than I would have expected. But overall, it's pretty much doing what I'd expect from the 10-year doing what it's doing. And so a lot of people focus on the shorter end of the curve. But because gold is generally a longer duration asset, it's best to compare it to other long duration assets, such as the 10-year treasury or longer. And so if you look at the real rate in the 10-year, ever since August of 2020, we've had nominal rates rising faster than inflation expectations. And so you've had a rising of real yields that are still negative, but less negative than they were at their bottom in August 2020. And so even though if you look at, say, earlier in the curve, like the 5-year, you're getting kind of a wider, kind of a more negative rates. If you look further out at the 10-year, that's where you're kind of getting some solidity there. Now, I do think that as we go forward a little bit, we'll get, inflation expectations probably catching up to that. And you might have seen kind of a rollover where gold kind of finds a bottom, real rates find a top. We have to see a little bit, more conviction on that. Right now, it's kind of a potential turning point that I'm kind of monitoring, that we might see a little bit of a decoupling here and gold kind of find its legs a little bit. But kind of the ultimate long-term thing is the potential for yield curve control or things like that. But the Fed's unlikely to move on that until things get disorderly enough that the market's essentially demanding it. Until then, they're basically keeping the short end tight. They're letting the long end rise. And so gold's kind of in a mixed condition because the gold really kind of focuses more on that long end.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.